You cannot sow something today and reap tomorrow. A seed has to go through the various seasons before it turns into a fully grown tree. And same is the case with investing. With that as the theme, welcome to a Zoom web series hosted by One Tree Hill and PMS Cart on the Juggernauts, conversations with uncommon and curious fund managers. Hi everyone, my name is Jai and I have with me today Neil Parikh of Parikh Mutual Funds. Neil, comes with 15 years of experience spanning across, different facets of the financial services, and also couples that with a master's degree from IESC from Spain. Welcome, Neil, to our show.
Thank you, Jay. Thank you for having me on my show. Looking forward to it.
Super. Neil, one of the things that we like to sort of get done at the start is what we call the machine gun 15. We definitely have a lot more fun in this. These are quick fire round questions that, hopefully put you in a spot and make you think for a couple more seconds than you usually do. And hopefully you will have a lot more fun than we do as well.
Okay, I hope there's a hamper waiting at the end.
We'll see. We'll see that. Yeah. So if you're ready, Neil, I can start.
Okay, let's go.
Perfect. The question on everyone's mind, why are the markets going up?
This is actually quite an elongated answer, but I think a few things is that markets actually have seen a very big, we had a big correction in March, and that was because there's a lot of fear prevalent. People thought it was doomsday with coronavirus. But as we progressed to the next month, okay, we knew that this is not going to wipe out mankind as such. It affects a small percentage of people. And the general feeling is, yeah, we'll get back to it and there'll be testing. And, people saw things getting a bit back on track also months back. Again, this is globally, not only in India, that things started opening up, economy started opening up a little bit. So people are just saying that, if we go back to revert to the mean, it's a good thing. So I think we saw a sharp correction and now we're seeing a sharp bounce back. Other factors is that there's a lot of liquidity. Interest rates are almost zero, negative globally. And equities gives a good opportunity. If there's dividend yields of 2, 3, 4% with a chance of capital appreciation, I think that's a better option than getting into some other asset classes. So these are I think a few things that, and honestly, there's no other asset class right now, so there's no other better option than equities right now. So I think a few of these reasons has made the markets bounce back and be buoyant.
Sure. So, continuing with this question, one of the things that comes up is the ground reality, and the markets are distant, right? Obviously, there are saying that, look, the market is trying to discount what happens in the future.
Yeah.
But honestly, there's very little information to go by. As you said, one of the liquidity might be a significant driver, right? The Fed has given $2-3 trillion of stimulus already in the last 2-3 months. And obviously some of that might fall into EM, some of the EM will fall into India, and that might be driving it. But at some point, when do you think the majority of the people will stand up and say that, look, I think markets are fairly valued now?
So again, like I said, we saw a sharp fall and a pretty steep recovery too. I think until there is uncertainty in the market, and there is uncertainty, there's uncertainty about corona, there's uncertainty about border tensions, there's uncertainty about a lot of things right now in the country and globally. I think the markets will be volatile. I don't think we'll have just a runaway bull market, but I think we'll have a pretty sharp ups and downs. So I think we have to be ready until some sort of normalcy is there, that markets will be actually very volatile. So
Sure.
so I think markets will be volatile. I don't think it's just going to be one way up.
Okay. And the extended question on this is, we've seen in India sort of follow very closely to what is happening globally, right? There's very, there 4 or 5 years earlier, there was a word which was, India is trying to uncouple from the world, from the US markets, etc. Do you see that uncoupling happening at some point, positively or negatively?
I personally, I don't think there's going to be too much of uncoupling happening. I mean, obviously markets move, different markets move differently, so 2000 to 2010, Indian markets outperform US. 2010 to 20 is obviously the US markets have outperformed, So we will definitely have these gyrations of different markets performing differently. But I think the economies as such, we live in a pretty globalized world, So today, even look at our cell phones. If you just take a example of our cell phones, we are using all foreign companies, right? It's either Apple, Samsung, or some Chinese company. Or if there's internet, if we have internet in the house, where are we going to? Instagram, Facebook, Netflix, Amazon. So it's very hard to decouple as such, because our product basket that we're using are pretty global in nature. So I don't think too much economies will kind of merge a little bit together, but markets might move differently.
Okay, sure, makes sense. Where do you think? What do you think is the next oil? Is it pharma or is it data? Or is it oil?
Data.
Okay. So, and on the question of data per se, and I know we can't discuss names, but we've seen a lot of technology companies come up in the US, right? Zoom is suddenly sort of a household name, right? Everything from Facebook, Instagram, all these are sort of big tech companies. Do you think at some point there will be a big tech Indian company that solves a lot of problems worldwide?
I think so. I think tech is the future. I think getting digital is the future. I think over the next few years, we will definitely see some companies from India doing that, and everyone has to, like it or not, has to concentrate on this area now, we are working from home for the last 3 months, and we know how it is, how digital is the way to go and how technology makes our life simpler. So I think that's the future. So I will not be surprised if we have some great companies from India in the space.
Sure. Neil, we talked about why the markets are going up, but let me try and get your thoughts on is there a second round of market fall coming, a significant second fall?
I don't predict about the markets, and it's a futile attempt to see where the markets are going. So I will pass on that because. Okay. I'm not going to predict because
so volatility. Okay, let me try and rephrase that. Would you say volatility will remain?
Volatility will remain. I believe so.
Okay, fair enough. Let's get to something interesting. One aspect that nobody knows about you.
So to be very honest, I'm a very open book. I really don't have too many secrets. So I think everyone knows. I think all my friends, family knows everything about me. So I'm quite an open book.
Okay, so let me rephrase that. What do the markets not know about Neil Parikh?
Markets not know about Neil Parikh. This has to be personally or professionally? Because professionally, I'm pretty, again, from a professional way, I'm pretty transparent about thought processes and what we're doing. But personally, people don't know that my favorite sport is NFL football, American football, and I'm a crazy fan of that. So if people didn't know, that's my favorite sport.
Sure. Do they still show ESPN on TV?
No, I have an app which I see. Okay. So the season goes on for 4 months, and the games start like 11:30 p.m. onwards. So if on Monday morning sometimes I'm late on those 4 months, people know why.
Excellent. From a sort of a stock picking and a fund management, would you double down or would you double up?
Okay. If you have conviction in the idea, then double down with your idea when it goes down and double up when it goes up. But conviction is very important.
Okay. Simplicity or diversity?
Simplicity.
Okay. Fair enough. Top down or bottom up?
Bottom up.
Okay. How would you rate the research on the street from a scale of 1 to 10, the sell side?
Okay. This is the conversation I have with my research team because they get the research. So it's I'm just relaying what my conversation with them have been. So I think there are certain houses or brokerage houses which give really good research, and I would say that 1 out of 5 research houses are pretty good. I think that's what I get from the conversation with him. That 1 out of 5, 1 out of 6 research reports are good.
Okay, super.
Yeah.
Yeah, absolutely. So almost to the end, one last question. Uh, where do you see the next innovation coming? And this can be quite broad. I'm not specifically asking for a
Yeah.
sector, but where do you guys see the innovation? Like to give an example, what you just mentioned, uh, you know, Corona or COVID forced the mutual fund industry, or even
Yes.
the people who are outside trying to do it in a physical manner, for them to shift and figure out how to do it digitally, right? And we've seen a
Yeah.
significant amount of shift to that, right? Where do you
Yeah.
see the innovation in the space that we are at?
I think innovation is definitely going to be from the digital space. I mean, even if you see something like what we're using right now, a Zoom. I mean, 3 months, 4 months back, we would not know, or I hadn't heard about Zoom before this, and now everything is on Zoom. So I
Right.
definitely think something that gets people together remotely is where the innovation is going to come from. So definitely
Sure.
in the digital space.
And will there be an Indian company leading that innovation?
I think it'll probably be a foreign company leading this innovation. I think we're a little behind the curve from the digital space compared to the overseas companies. So
Yeah.
there would definitely be some good Indian companies coming, but I think the main innovation will probably be led from a company outside from a company outside a country.
Okay, great, Neil. We've reached the end of this Machine Gun 50, and hopefully you had as much fun.
Ooh, yeah.
I'm happy to announce that you've won, and won with flying colors.
Thanks.
There should be a hamper on its way, but the 2 kilometer radius is stuck on the 2 kilometer radius in Bombay. Uh, so it'll get to you at some point, is my guess.
Don't worry, I'll come and pick it up.
Might not be so simple to pick it up either. So no, but great, and sort of talking on these restrictions and these constraints coming down. And I know that some offices started. Now we are closing down again. Cities across India are again sort of thinking about sort of locking down again. Where do you think this lockdown unlock will go? Will it be sort of a diminishing W, or
Hmm.
will it be, because our lockdown was sort of synchronous? The unlock seems to be anything but that.
Yeah. So I got a couple of thoughts on this actually. One thing is that I think it's a double-edged sword in the sense that we need the economy to start running and start people get to work and just have stuff starting off, and the downside to that is if more people go out, there's a chance of more infection. So I'm actually sympathetic to the governments here. What do you do? It's a double-edged sword. But Jed, actually, last week I had to go out on some work and I had to go to a few places, and I was actually quite shocked that people were not following the safety standard, which was face mask or social distancing or sanitization. A lot of people were pulling down their mask while talking, which serves no purpose whatsoever. I think we, as a people, if we are not going to be disciplined, you cannot expect the government to just open up. So I think
Right.
it all starts with us, and I was pretty shocked I was pretty shocked that people were not following a lot of these regulations. So I think once when we have the discipline, I think government will have more of a they will be more confident to let it open. So we opened and then we shut, and I hope this time it makes people realize that we have to do our part for the government to do theirs. So I'm hoping people realize that, and over time it'll be I think it'll open up in a much better way. I think, yeah.
Sure, sure.
Yeah.
And sort of, now moving on to the mutual fund that you guys run. And, the first thing that sort of, popped out at me is that, here is someone who sort of had the first PMS license in India, right? Uh, and now is running, or has sort of, shifted most of their clients to the mutual fund side.
Yes.
Generally you find it the opposite manner, right? Where there are fund managers who start from the mutual fund side and then go on to run their own PMSs for various reasons, right? So it would be really helpful to us and our audience to sort of if you can just take me through that aspect of journey, and then obviously understand more about what all the fancy stuff that you guys are doing
Okay.
at PPFAS.
Okay. Yeah. So I'll just take you back to about 2009-10. Let's go back because that's where the idea started popping in our heads. We were running decent PMS and it was going well. Then the financial crisis happened, and when we started looking around, we really wanted to invest in the US markets. We thought the valuations were amazing there. Things had like great companies that just fallen to nosebleed valuation, and we're like it'll be interesting to pick these up. So how do we go about that? So I think the first seeds were planted at that point. How do we do the international investing part? This was around 2009-10 around. And the PMS didn't allow the PMS doesn't allow you to invest in overseas stocks, with this with the PMS structure. So at that point, we started opening individual accounts for our clients, for our HNI clients who wanted to invest abroad, and we had told them that listen, it's a great opportunity right now if you want to get in, and there were some of them wanted to invest in this opportunity. So we had to open individual accounts for our clients. So there was quite a lot of paperwork. It was bulky. It was yeah, back and forth. It was operationally little taxing, on our own people. Secondly, a lot of people wanted to either hedge the currency or leave it unhedged. They had got the option to do what they wanted. So imagine when they wanted to hedge the currency, which is again, it's not a bad option, right? I mean, you hedge the currency, you smoothly make your forex there, forex premium. But the problem was most of these people were professionals. They were busy in their lives. They were traveling, and every time the rupee depreciates, we had to call them, sir, margin call, sir, paisa to, sir, and it would be actually annoying to the client. It was more of a detriment than it was being helpful.
Right.
So we're like, okay, we need to find a better way to do this, because this is a great opportunity that we want to participate in. And that's when we thought, okay, let's go to a mutual fund structure, because a mutual fund will let us invest abroad, at least to the tune of 35%. We'll be able to invest abroad. So that was one of the main thoughts, is that where can we diversify globally, and the mutual fund structure for us was a better option than the PMS. Secondly, the PMS, again at that time, the minimum from PMS had risen from 5 lakhs to 25 lakhs. A lot of our clients between that 5 and 25 lakhs,
Sure.
And what we had to tell them was either you top up or you have to redeem and leave,
Right.
This didn't sit too well with us, because we had nurtured these relationships for quite a few years, and we wanted them to stick with them, and a lot of them wanted to stick with us. So mutual fund again would solve that problem. Thirdly, at some point we thought that long-term capital gains will re-enter the markets, and they will back. We didn't know when, but when it did, a mutual fund structure for us worked better for a compounding machine, because you'll only be taxed one at the end at redemption, and in a PMS you're taxed on every buy and sell. So that was another reason to go. And again, it's just operationally much easier to run a mutual fund, and it's a scalable structure that we can do. So some of these reasons is why we moved from a PMS to a mutual fund, and we pretty much transitioned all our clients from the PMS to the mutual fund.
Correct. And so sort of staying on sort of strategy that you guys run, and clearly one of the biggest things that has worked for you all, and rightly so, is the diversification that you talked about, where you all saw that opportunity of US stocks being cheap, right?
Yes.
It's only, I think, and the more that we're talking to clients right now, that is starting to become sort of in vogue. A few sort of US tech funds, a sort of client coming and asking us that, look, how can I invest in either FANG or any of these tech companies and participate across geographies, etc. We just wanted to understand more about, obviously it's simple to say that, look, we found it cheap. But I would have assumed even at that point, it wasn't a simple thing to do, as you said, operationally. But what are the 5 things or 3 things that you look at when picking up a stock, even outside of India?
Yeah. Okay, that's a great question, actually, Jay. We have a checklist we have a checklist of the company, how we screen the companies and come to a circle of competence. About 400 to 500 stocks is kind of our circle of competence. So we look at management quality, low debt, high cash, some kind of moat. Obviously, valuations play a very big role in while investing, and paying the right price for investment is very important to us. So these things are common between Indian stocks as well as the foreign stocks. I mean, we look at all these qualities, the qualities and the attributions that we like in company, which are there for both. one thing we wanted to, when we went abroad, is buy globalized businesses. We didn't want, because we are already taking country specific risk on our 65% of the portfolio, which is the Indian portfolio, which are
Right.
Indian centric. We didn't want to go abroad to say US or anywhere and buy a company which is only catering to the US market. We wanted companies which were globalized in nature, which we understand, which
Right.
derive most of their market share from different countries, developed market, emerging, developed, whatever it might be. So that was one big thing, that we have to be familiar with the product, we have to be familiar with the company, and it has to be globalized, because in that way we take away the country specific risk that we're already taking 65%. So that was a big criteria of investing abroad. Also, again, like I said, technology made it very easy for us to invest there, because all the things that people say, oh, how do you get to meetings, or how do you get there's a delay in information that you guys receive. But with technology, that is not a concern anymore, and you get all the information. We are buying, like I said, when we are buying globalized mega companies, information is available all amazingly well, so we didn't have a problem doing that. We are not getting into the small and mid cap space in the tech, in the globalized in the global portfolio.
Got it. And so sort of while things have been volatile in the recent past, has there been some time during this journey that your organization has done where you have had to say that, look, we need to question our style, processes, make adjustments into what we are trying to do, rather than say that, look, this is going to work for eternity?
Yeah. So a lot of this had to be, so I think the investment process, investment philosophy remains the same. I don't think that has changed too much. I think at the margin, yes, we have honed our process a little bit. We've used tools to sharpen our processes. We've used technology to sharpen our processes. So wherever we could make it easier for the research team to do more meaningful jobs, we've been doing that. I think more of it has to be done on the business side of things. I think the investment style kind of remains the same, just a little bit of changes here and there, but by and large, it's remained the same. On the business side, of course, we had to keep looking at things and seeing and what the strategy was, because in 2013, when we started to now, the journey has been different. There were a lot of roadblocks for us. I mean, the net worth criteria of a mutual fund had changed from 10 crores to 50 crores. We had to capitalize that. So how do we change the business model by not taking outside capital and just be doing it organically? So those are the questions that we actually had. Again, we were pretty early to realize that digital is probably going to be the way to go. So from the beginning, we've concentrated a lot on that part of that part of the business. How to get an app and the web app and the online fulfillment, right, is where we've had to make some changes and those things. But on the investment style, on the investment process, I think we've been by and large pretty steady on that front.
Okay, super. And it's great to hear that people can remain true to their sort of process, because obviously the market takes you up and down through its journey. But how do you sort of remain or control sort of your emotional quotient, when things are not going great? Maybe you guys have seen redemption at some point. Maybe your fund is underperforming the peer set, etc. How do you control that emotional quotient?
I think one thing is being honest to ourselves and to our investor base and telling them these are the times that we will underperform. So you kind of know when you are going to underperform. For us, we're going to underperform when Indian markets are in a go-go bull market. Having 35% outside India and probably not being very big momentum chasers, or not being momentum chasers, just being value investors, we know at that time there will be underperformance. I think communication is very important. For that, we have AGMs for our unit holders every year. So this is a time where we communicate with them. And so 2007, for example, that was a year where we underperformed. We were in the fourth quartile and we underperformed the multi-cap spaces, because the fact that we thought the mid cap and small cap space was expensive. We were sitting on about 25-30% cash, and at 35% of our portfolio outside India. So for surely we knew if there's a bull market in India, we will be underperforming.
Correct.
And telling people that this is the time we'll underperform, it's okay, because keep their expectations also low at that point.
Sure. No, fair. Makes sense. Yeah, makes sense. You know, one of the, and this is probably one of the interesting questions that we do, you know, over time, what I call tuition fees is what every fund manager, investor, maybe, you know, college student, you know, participating in the F&O sort of space pays at some point, right? What is that one point in time where that you can highlight where, you know, either you or your organization has paid a sort of significant tuition fee from which a good amount of learning has come?
Yeah, I think one thing is that from a fund perspective, or from our the way we manage portfolio or the mutual fund, I think one learning for us has been that government is not a very good partner to partner with. So we don't our preference is not to get into companies which have say public sector banks, for example, or any public sector related company, or say where populism can take over and guide what happens. So we had a company called Noida Toll Bridge back in the day in the mutual fund, you know, and it was basically it's a bridge that joins Noida and Delhi, and basically as the cars go left or right, you're going to get the toll, and that just gets, and they were debt free by that time, you know. So and everything was just on the bottom line. We would just collect on the bottom line, and the dividend yields were great. It was amazing, 7, 8, 9, some 9% or something. I don't exactly know the figure, but it was really good, and it was increasing on a yearly basis. And we thought that this is like a perpetual bond that will just keep paying us, and with a chance of capital appreciation. But one fine day, we woke up in the morning, and the bridge had become toll free. Because of the elections or whatever it might be, populism and all these things, and like it was on a lower circuit, and luckily we could sell it in the next couple of days. But actually, that was a big learning, is that listen, let's not get into public sector or where the government has some role to play. You know, let's stick to the private sector. So that's kind of the learning on that part.
Fair enough. I'm assuming it was a couple of nights of sleepless nights.
So luckily, it wasn't a very big position in the portfolio, but yeah, it was uncomfortable. Let's put it this way.
Fair. You know, and sort of on the opposite side, and you know, one of the clear things was sort of a move to participate in US companies. But what was that one other thing that maybe you guys saw, which was quite sort of obvious to you guys, but the market in general missed, maybe, or you know, something from an Indian perspective?
Yeah, like I said, I think 2017. I'm giving an example of 2017 because it's the most recent, but I can go back to 2007 or something also. Let's stick to 2017. Will probably be fresher in people's mind.
Sure.
I think we realized that time that the mid cap and small cap space had just run away. You know. And at that point, most of us, being a multi-cap, we also had positions in small and mid-caps. And we actually thought that, listen, these valuations are really, really gone little berserk, you know. So let's take some money off the table. Let's sell some of these stocks and let's take some money off the table. So we sold those stocks, and we weren't desperate, though. It was a bull market or whatever the market was just going up one way. We said that, listen, I think things are a little heated right now. Let's stay put. So we had about 30% cash position at that time, which was, I mean, for a mutual fund, that's really, really high, you know. I mean, most of mutual funds want to be fully invested. But we took a call that, listen, we'll go where valuations are attractive, and we didn't find anything attractive. Surely, like I said, 2017, we underperformed. We just got fully invested in April this year. So over 2-3 years, that those things have taken. I think that was an interesting point in time. So yeah, that just gave us confidence to follow what we think is right.
No, it's great to see mutual funds, you know, sort of taking these cash management calls to try and figure out and sort of, you know, not timing the market directly, but trying and sort of saying that, look, now is not a great time to invest in, and we might as well try and play it that way. So I think definitely you're one of the few guys on the street that are not trying to be index huggers for sure, without a doubt. One of the things which is interesting, which has happened in the last 2 days, and let me try and get something in. We are almost out of time. Is on the China piece, right? So much talk on at the border with apps, with Zoom, etc. Where do you think is are we headed towards what happened with US and China? Is something India gets caught up with India, sort of China, India, US, etc. Or are we actually going to become Atmanirbhar at some point?
To me, my personal opinion is that I don't think we can just, we banned the apps and all because those were low hanging fruits. I mean, with border tensions with China, I think the nationalist emotions were high, and the government probably needed to do something to appease that. And banning apps and stuff like that was a low hanging fruit. So, okay, it was kind of basically get the sentiments back in order. But on an overall scale, I think we are quite dependent on China for our raw materials, for a lot of things, to make a complete to make the complete product here, manufacturing product here. So a lot of the raw materials are coming from China, which are very necessary, uh, and a lot of our companies are really dependent on those. So I mean, if we ban those things, I think in the end we're going to hurt ourselves only. So I get the point. I think this. I don't think we'll be able to do all those things that have a blanket ban on China, because we also have to see that we also export to them, and we export far more to them than they export to us. So I think we have to see all these things together. I think what this will on the positive side, what will happen is that we do have to find alternatives. It's not going to happen overnight. It'll take years before we can make that switch. So alternatives are right now. I can see a lot of people finding alternatives or talking also. Okay, we will make this in India. But all this will take time. I think there might be a paradigm shift towards doing all these things. But immediately, I don't think we are in a position to have a complete ban on Chinese products or any of those things.
Okay, fair. And the last question, Neil, which we try and end it with, is that you guys have been in this space for a really long time, right? But there might have been people who are just starting off, right? Whether on the PMS side, taking in sort of their savings, investing in markets, taking some external money, taking some client money. What is that one piece of advice that you would give to them right now, having seen the last 6 months?
Yeah, I think if you're coming to the markets to make a quick buck, don't. It usually ends up wrong. I think if you're coming to the markets to fulfill a goal or have a long-term wealth creation strategy, which is at least 10 years from here, is the time when you come and invest in the market. And it's not going to give you a straight line kind of returns. You will have to go through the roller coaster of volatility. So if your heart doesn't tell you to do that, and if you are not emotionally strong to handle the volatility, then it's okay. Don't invest in. But be prepared. If you're coming to the market, be prepared for ups and downs and have a very long time horizon.
Superb. Thanks, Neil, so much for your time. Hopefully you had as much fun as we did. And
I had a great time, Jay. Thank you so much for having me.
We like to get all fund managers who do well. So
thank you so much. Thank you.
No, but I think you guys definitely have a very different set of philosophies which have made you all successful. And here's wishing you guys a brilliant 2020, maybe the next decade of outperformance, and wish your team at Parikh best of all the luck possible.
Thank you so much, Jay, for those kind words, and I wish you the same too. And I hope we can meet in person sometime soon, very soon.
God, with the hamper.
Yeah, definitely.
Okay, Neil, thank you so much for your time.
Okay, thanks, Jay. Take care. Bye.